So, Phon, buffered ETFs are really about risk management.
Correct.
How does Veta manage risk in both up and down markets?
A lot of the risk management we do is like on the calm days or the up days. So whenever the market's rallying a lot, my team and I are doing a lot of work. We do something which is called rolling up, what you would call rolling up the buffer and cap. For example, if we bought a buffer ETF in January and the market's up 10%, that buffer ETF is going to be up about 6 or 5%. So we'll look to sell that and buy a new buffer ETF that has a new buffer and cap. So it's kind of rolling up your floor and giving you a higher cap. So we're always optimizing the portfolio on the upside. So that whenever the market goes down, our buffer is higher. So that really helps the portfolio. And then we work together on creating the QBUL and QBER ETFs. Those are great in terms of up or down markets. So we generally have an allocation between 2 to 10% in QBER or QBUL, which was really cool was they've actually both were up. QBER is up more, about 5 to 7% when the market was down on Friday, August 2nd, on Monday, August 5th. And which was also really cool is QBUL was also up. So having all those tools in the portfolio really gives our portfolio a big advantage when the market gets very volatile. When the market's down, we're in a really good position to buy. For example, we bought some of the uncapped structures on Monday when the market was down. So hopefully that gives you a good example of how we manage risk on the upside and downside. It's very similar. I also like to say, I studied Warren Buffett a lot. I also like to say we're like the digital version of Warren Buffett. Be fearful when others are greedy and greedy when others are fearful. It's very easy to say, but hard to do. But having structured outcome ETFs and buffer ETFs and QBER and QBOR in your portfolio actually lets you able to do that.
Well, it's a good example. And I would say that it's also a great example of how you can customize a risk return profile utilizing something that may have a different expectation standalone. And then second, I would say if we can emulate Warren Buffett, we're usually in good hands.
Yeah, and then kind of reminds me earlier in my career, I managed large pools of money for insurance companies and banks, and my team, I led teams to trade actual options. What's really amazing, what you've done and other ETF providers have done, have actually provided really sophisticated option strategies in the ETF format. So now my team are able to do that for advisors and clients in the ETF wrapper, which is pretty cool, I would say, in my mind. So
I would agree.
Yeah.
All right, thanks, Phon.
Sure.